What's going on, guys? Got a little live trade example here for the YouTube. Right now, we're trading with a couple of the new PA accounts here just from Apex Funded Trading as we do. And we do have an impulse outside zone on NQ. So if you're looking at the Thinkorswim box right here on the NQ, we are outside of my Keltner band channel, which means we have an overextension. This is the lower band here. Where's my drawing tool? Never shows up in any of the 6 monitors you're always looking at, huh? There we go. All right. Okay, see? Drawing tool random pop-up. Thanks, bud. Always delightful to use crap programs. All right, so we're outside impulse zone looking for a fresh low reversal. So the algos, they love to go stop loss hunting for people that, for some odd reason, they pick low a day for a stop out. They don't let things work out, right? So right now, we had a pretty good P&L. Getting scammed pretty big right here on the 1 minute. We have the MACD bullish, RSI bullish. You can see everything bullish right here. So the RSI and the 50 had just rejected right here. So that's the only resistance point where the MAC should come back down, find the higher low and go. But generally price action will show divergence while this is forming. So what this likes to do is it kind of pushes down into fresh lows and then does a reverse, especially when we're outside the impulse zone. So again, when we're outside of this impulse zone here, let's try to make this fit. There we go. On the 5 minute, we generally come back to the impulse and reject, which we just did. So I took 2 different trades there, one short, one long. So I longed it into here, shorted it into here, and now we're working on another long from a fresh low reversal. So you want to see what it's doing right now, fresh low. This is stop loss eating. That's what NQ is good at. And we already hit a fresh low. So this is where you DCA into an actual position because we only have one contract on, which is nothing. And then for the scaling rules and the new ones for the PAs, I think you have to stick within half. So if we got 14 contracts to use, we're going to stay at 7 or less. I probably don't use any more than 2 to 5, really. So that doesn't really bother us at all. But with the fresh low break right here, the volatility index is shooting up. It's on its second gap and go day today. So with that fresh low, we're going to grab a couple more contracts there. And then we have a bunch of algo targets and above. We're going to look for this 100 EMA 1 minute. So if I go to the NQ right here, you're going to notice that the 100 EMA, we had a break test right here, 200 SMA, center Keltners. We had a bunch of different bands there. But generally speaking, when you see it kind of miss one of the primo back test on a moving average, in this case, it's the 200. So this peach dash line right here, that's a 200 SMA on the 1 minute. Notice that the price action snapped through and then came back up and never hit it. We call that a shy, right? So price action came up, shied it from the 100 EMA and 200. So when the support comes, when you start seeing the confirmation, when you start understanding the NQ algos and how they work, when you see fresh low stop outs, stop loss eating here on impulse, again, we're outside hit zone, outside, you look for the fresh low and you watch for reversals near fresh low and divergence. We'll generally come back to the moving averages that we had shied. So the 200 is way up here at the center. We got VWAP in the purple and then the 100 EMA. So we do have a not a certain amount, but a limit to how much we can make. There's a 30% rule on a I think it's what? It's a $3,000 loss. These are fresh accounts. So to close these out, I would have to lose 3,000 and then you times that by 0.30. So you had about $900. So I'm pretty sure the 30% rule would apply to the obvious standing of what your profit would be. So we don't really want to make more than like $1,000 or just under on the account. So when this does reverse and start going back up, we do have to close out a little early. That one's going to be quite far away for the P&L, but because we're going to get this impulse zone back up, wrong. There we go. Because we're going to get this impulse zone back up on a fresh low, we're going to see some of these P&Ls go a little bit too high. So we're going to have to get out a little bit early, right around 900. So we got 3 contracts total. Again, 5 is about max that I'll use. We have a low a day. We got a fresh low break. This is what the algos love to do, stop loss hunt. But when you're outside of an impulse zone, like we are talking about here, the bottom of these Keltner channels, and then it comes back for a tag, we have a impulse outside of zone, retrace back to zone. This is the long I played, and then I shorted the zone because the first zone tag back always comes back for a fresh low. I shouldn't say always, but high percentile chance. And then it starts to climb back up and really starts its trail back up because it stops out all the people that longed right at the bottom here. And then it destroys the shorts that would chase a fresh low breakdown. So again, those are pretty crappy rules. You never want to short lows, never want to long highs. And you always wait for that confirmation. And algo structured trading is what we do. So we're very familiar with how price action stop loss hunts. So I play a lot of that in between. So again, this sequence low, that's my over under. We need to stay above 20,384 on the support consolidation here. It can jerk around a little bit back and forth. That's fine. But like I said, we're only aiming to make 900 on these, staying into that 30% rule. Push, hit, and then we're going to impulse up 100 EMA on the 1 minute, 200 SMA. And I have algo driven longs as high as 20,430, 37, and 57. So we're talking way back up here, which would make sense because that is generally right in between where the 200 SMA is, right? So 200 SMA 1 minute, you can see in the peach right here, 20,444. So if we have algos ranging right under that, 20,037 all the way up to 20,057, it's telling us that there's a great chance to come back up to the 200 SMA and VWAP area, right? So these little red candle stops right here, unless it really scams out, we're getting a higher low on the RSI. The MACD, like I said, is coming down for that second little wave, and the MACD has to come up to the zero line yet. So the MACD based on the 1 minute did a cross. That's bullish. We have a MAC wave, which is larger than the sell wave on the histogram here as well. So we do have sell wave, small, and then buy wave, long, bullish biased, right? And then the moving averages here on the MACD are showing a cross one right here, comes back up, needs a cross number 2 and to continue. And it's interesting to see the oscillation indicators because the RSI is always first and the MACD is slower. So if I rearrange this out a little bit, you'll notice that the zero lines, we use half and zero lines here a lot in my trading, and that's for the RSI and the MACD. So when the RSI is overcooled here and it comes back up, it's usually to the 50 waypoint because the market loves to work in half values. So halfway of oversold and overbought, which I did that backwards, but overbought 70, oversold 30. A lot of the time when you get structure like this in a relative strength index, the RSI moves before the MACD. So you're going to see the RSI push here, hit, find resistance in higher low, showing you a bullish metric reversal. And the MACD is going to cross with that RSI coming out, but the RSI is going to hit the 50. It's going to cause resistance. Obviously, you see that right here. And then the RSI is going to come back down for confirmation, higher low in the oscillation, and the MACD is going to almost hit the zero line. It's going to leave a gap here, right, at the zero line. But the MACD has a chance on the 1 minute to come back to the zero line, right? So this is the whole thesis. You wait for the RSI to play out, because that's the first one. So we caught the bottom, then we shorted the top, real tiny orders, right? Just starting on these accounts, comes back down to fresh low, but price action is showing you fresh low. But what's RSI and MACD showing you? Right, continuation. So the algos, they love to fresh low stop people, right? So as we discussed, we need to trap shorts on fresh low reds. We need to trap, not trap longs, but stop out the longs that for whatever reason put their stops at equal lows, double bottoms. You really got to let price action work. You got to size down a little bit and really let your trades work. To adhere to these algos, especially in NQ. NQ is notorious for blowing past moving averages, price levels, fibs. Doesn't matter if it's weekly or daily. They have a big structure break lows, and then we're coming back. Just kidding. And those traps exist everywhere. So we are going to get to the $900 P&L about. I'm going to aim on these accounts to make anywhere between $500 and $900 per account per day as we grow them. And back to trading with Apex. I had a lot of new rules, a lot of new stuff, and we made a little deal because last time I traded with Apex, I had 6 different accounts, 60,000 green. Tried to move me over to a live account, but we talked, and we have a structured deal now for advertising. So again, the link in the description, TG33, will get you a big discount on the Apex accounts if you want to trade with them. And I'll be showing you guys these live trade breakdowns and fun, while you're trading all the time. So we're gonna let this trade work out here a little bit. We have all the divergence and indicators that we need for everything to work. If we get scammed out and it really starts to dump, we don't have far to do stop loss. Another fresh low is just stop for me. Double fresh low stops generally always. But right now, volatility index, again, VIX just pushed into a pretty nice move here as well. So the volatility index, this is the 5-day, 5-minute, right? And this is where I generally use no matter what on the VIX. And we have deviations, right? So the center deviation is here. And a lot of the time the VIX does not move past +1, -1 on the 5-day deviation. So what I mean by that is if you have standard deviation here, it's a rarity to see that the volatility index, especially at a really pinnacle moment right around $20 here, that actually does move outside the ones. So the 0 line is the white. These are +1, -1. These are 2. This is 3. This is 4 in the purple, which is extreme. CPI Powell days, very rare do we get some moves out there. And as you see, -1 right here caused a double gap up day push. Another close to -1 bounce here, 1.5 deviation back here, cutting up. So we are looking good for VIX coming into specific resistance. Now we're a little early because it's like 58 a.m. So a lot of those algos wait till around 5:30, 6:30 actually for reversal. I've noticed, but I think we're still good because right now this volatility index is pushing past the +1. It's on a pretty straight up move, right? It needs confirmation, and a lot of the traders that like us that wait for confirmation is like when we get fast-paced squeeze moves up like this impulse, we know it's going to come back down regardless if it's going to consolidate to go back up. We are hitting an extension point where at least we know we're limiting our exposure because the volatility index did do an impulse move up. We are into a deviation, $19.18, which anything over that is a relatively great metric for risk management, saying the volatility and index's impulse move does need a little bit of a relax, and that's just in standard technical analysis trading. We don't use a +1, -1 standard like this if we're trading through data, CPI releases, PPI inflation, Powell. That can range up to 2 3s where you start seeing the volatility index whipsaw back and forth because those crazy data moves. A standard technical analysis day like today is just going to provide us with a +1, -1 with no news. So we're getting in really early in the pre-market, 4 or 5 in the morning. We're trying to worry about just the general trade algos. We're not trying to get hit with, trading at 7:30 a.m. for jobs or anything like that. These are the slower, trades for the pre-market. And generally they work out a lot better. So let's get back to our little trade here for the live example on the PA Freshies here. So again, we just took a couple of contracts. This is our third round trip for the scalp. You notice the MACD is doing exactly what we were talking about here, where it does the initial cross, comes up, scoots, misses the 0, recrosses, comes up for the next 0, right? RSI, again, higher lowing after the 50 hit, so it has a chance to come back up. Now, there's no guarantee here. These are just the metrics that we're watching, right? Because the stock market is going to do whatever the stock market wants to do, but these are just general risk management indicators that we follow to assess your trade. And if it goes against you and the market goes, you just utilize your stop always, and don't get upset, don't get emotional. What do we have for the 5-minute MACD here? We should be getting pretty close to the 5-minute MAC cross. That might be what the market's waiting for. It is 5 a.m., so we're about to get a bunch of new candles here, new 30, new hour candle, new 15 candle. So again, generally, I like to see those new candle shifts. We just clicked into 5 a.m. So again, it's very extended on the 5-minute here. That MACD is not quite ready yet, but I think we're okay. That MACD needs to cross. We're on the seller backside of the histogram. Again, higher lowing RSI. And this is where you want to see the 5-minute now take over of what the 1-minute has already performed. So we discussed the 1-minute RSI already performing the higher low push to the 50. Now it's the 5 minutes turn, right? Being a slower time frame. We don't want to miss out on the move, but we also want to see the mirror, right? So that 1 minute that has already completed a low, higher low, push to the 50 point for me. And the MACD obviously lags. So what we're playing is the RSI's 5-minute higher low push to the 50, because that's going to come first. We're playing the fresh low algo stop out, right? NQ, they go hunting for your stop loss, then they reverse. And that's a typical algo play for me. So we're going to see how we how far we push. And again, we can only make so much. So these P&Ls right here on the PA accounts for Apex, we only got a $600 buffer on this. We're not going to sit here and $4,000 a day, blah blah blah. We're going to keep it nice and tight and small. So right around $1,000. We'll be fine for consistency. So all right, fresh low days. We're just consolidating again. We just got all the new candles. So if there's a continuation down, it might be pretty quick. Pretty big flash. I assume we're going to get a pop here in general. So we should do a little math while we wait. So we have 3 contracts, which is $60 a point. And if we only want to make 600, we got to take 600 divided by 60. because that's $20 a point. So we need 10 points, obviously, pretty easy math. So 10 points from average, which means our out for this one would be 48. So 20,388 to 20,000. Oh, hold on. Actually, am I going to add? No, we'll stick with 3. We'll just stick with 3. 10 points. So 10 points in the average. Average is 20,000. 388. So we'll just look for 98. So 98 would be right up here, be about 10 points. So we can put those orders out now if we want. And how Apex how Tradeovate works is we got 3 and 3 for contracts. That's 6, right? So if I put 6 right here, that's going to put 3 and 3 on each contract, or on each count. 3 plus 3, 6 total contracts. Every platform is a little different. So if my average is 88, we're going to go for 98, and that'll be our out for 600 bones, and that'll make our total about $10 shy, depending on commissions, for the win. Okay. All right, so let's just watch this play out. I'll end the video there with all the explanations, and I'll jump back into the video as we get the long situated out. Might take a little bit longer because, again, the MACD on the 5-minute, not quite there yet. So if the RSI decides to come back down to the bottom one more time, it's just going to be a larger consolidation piece. I don't expect too much like fresh low pushes, so I don't assume we're going to come down under 20,375. But if we do, that's a stop for me, and we'll go from there. So we'll tune back in a sec. Let's see how she goes. All right, guys, almost missed it. It's coming back really fast here, as we discussed. So, like I said, no more fresh lows. It will equal bottom out here, and you'll see this thing come to fruition, and we'll get our 10 points here in a second from the impulse zone. So, as we discussed, back to the impulse zone. As we discussed, no more fresh lows. Low was 20,000. Okay, there's our order fill. Order was 20,375.56 was the low. And like I said, there won't be any more fresh lows because this is a very typical NQ move. Now, we have a ton of range to the upside here, and I think we're going to be, again, coming back towards where our algo range is, 20,000, like 429, so on and so forth. So we got a lot of room here. But again, sticking to the plan. And the PA account's only going to make $900. We'll aim for about $1,000 a day or something like that. We do have 4 accounts. They're not open yet. Apex has taken their time on the open. So we have not gotten those, but I did just start yesterday again with Apex and passed 4 accounts. I was only credited for 3, so I had to open up a ticket and say, hey, you forgot my 4th account. But we'll get there. So that's another trade example of how to trade outside of our band. So we do this live every single morning for our trade service. So if you're ever interested in signing up, the links are in the description. Watch the rest of the impulse move right here as we dinged into that fresh low reversal. We're going to be coming back up, I think, to that 100 EMA 1-minute minimum. We're on the 5-minute chart right now. But that'll be that. So thanks for tuning in. We'll catch you on the next live trade.